Let me start with something important. The 5 changes we're covering today are not predictions or possibilities. They're already happening, and each one follows a timeline that doesn't wait for anyone. Government agencies, mortgage companies, landlords, and lenders all operate on fixed schedules. They send notices because they're required to, but they don't make sure you understand what those notices mean. That's why so many Americans end up paying more than they expected or miss opportunities that could have saved them thousands of dollars. A mortgage payment suddenly increases. Flood insurance becomes mandatory. Rent goes up with little time to respond. Free home improvement programs close before people even know they exist. And new federal housing guidance changes the way real estate transactions are handled. None of these situations happen overnight. They simply catch people off guard because they didn't know what was coming. So let's go through the 5 changes you should know about before they affect you. Change 1. Escrow adjustments could increase your mortgage payment. If you have a mortgage with an escrow account, there's a good chance your monthly payment will be reviewed in the coming weeks. Your mortgage servicer collects money each month for property taxes and homeowners insurance. Once a year, they perform an escrow analysis to determine whether they've been collecting enough to cover those bills. If taxes or insurance premiums have increased, your monthly mortgage payment usually increases as well. For many homeowners, these new payments take effect in September or October. The reason this matters is simple. Property taxes and homeowners insurance have increased significantly across much of the country over the past few years. Even homeowners whose mortgage interest rate hasn't changed are discovering that their total monthly payment is going up because escrow costs are higher. Imagine a homeowner whose property taxes rise by $300 for the year, while insurance premiums increase another $500 annually. That translates into roughly $65 to $70 more every month. For someone living on a fixed retirement income, that increase can make a noticeable difference. The problem isn't necessarily the increase itself. It's the lack of warning. Many homeowners don't look at their property tax assessment until the escrow notice arrives. By then, they have only a few weeks. Checking your county's property assessment now gives you valuable time to prepare. It also allows you to verify whether the assessment appears accurate. If comparable homes are valued lower or your property information contains errors, many counties allow homeowners to appeal, but those appeal deadlines are often short. Another detail many people overlook involves the escrow calculation itself. Federal rules limit how much extra money a mortgage servicer can hold as an escrow cushion. While mistakes aren't common, they do happen. Reviewing your escrow statement carefully allows you to confirm that the numbers all make sense. The key point is this: don't wait until your monthly payment changes. Check your property assessment now and question any numbers that don't appear accurate. Change 2. FEMA flood map changes could make insurance mandatory. The second change affects millions of homeowners, even those who've never experienced flooding. FEMA continually updates its flood maps to reflect changing conditions. When those maps change, some properties that were previously considered low risk are moved into higher risk flood zones. If your home falls into one of those newly designated areas and you have a federally backed mortgage, flood insurance can become mandatory. Many homeowners assume they'll receive plenty of warning. Unfortunately, that's not always what happens. FEMA generally mails notices using county property records. If that address is outdated or incorrect, the first notification you receive may come from your mortgage servicer instead, and by then, you may have only about 30 days to obtain flood insurance. If you don't purchase coverage yourself, your lender can force-place a policy on the property. That's where costs can increase dramatically. Force-placed insurance often costs significantly more than a policy you could purchase independently. Imagine a homeowner who never needed flood insurance before. They miss the original notice and only learn about the change after receiving a letter from their mortgage company. Instead of shopping around for affordable coverage, they're suddenly facing a deadline that could leave them paying thousands of dollars more each year. What many homeowners don't realize is that FEMA's determination isn't always the final word. Owners can request what's known as a Letter of Map Amendment, or LOMA. This process involves obtaining an elevation certificate from a licensed surveyor. If FEMA agrees the property was incorrectly classified, the requirement may be removed. The simplest action you can take today is to check your property's current flood zone designation using FEMA's Flood Map Service Center. It only takes a couple of minutes. Change 3. Rent increase notices are coming. Know your rights before they arrive. Even if you're not a homeowner, this next change deserves your attention. Landlords planning rent increases for next year will begin sending notices during the fall. Most states require advance written notice, but the amount varies. Some states require 30 days, others 60 or even 90 days for larger increases. By the time many renters receive those notices, they feel like they have only two choices: accept the increase or move. But that's not always true. Many cities and states have rent stabilization or rent control rules that limit how much landlords can legally increase rent in qualifying buildings. Imagine receiving a renewal notice increasing your rent by 10%. If your apartment falls under local rent stabilization rules, that higher amount may not be legal. That's why understanding your specific situation matters. Coverage often depends on factors such as the building's age, ownership structure, or local ordinances. The smartest approach is to research your city's housing authority or rent board before renewal season begins. Knowing the answer puts you in a much stronger position. Change 4. Thousands of dollars in free home improvements are available, but many people miss the opportunity. This is about taking advantage of a benefit that many qualifying households never claim. The U.S. Department of Energy's Weatherization Assistance Program helps reduce energy costs. This isn't a rebate that requires you to spend your own money first. For qualifying applicants, the program pays for the work directly. Improvements may include attic insulation, air sealing, heating system repairs, and other energy-saving improvements. The average value can exceed several $1,000s. For seniors living on fixed incomes, lowering monthly utility bills can be just as valuable as increasing income. The challenge is timing. Applications are processed throughout the year, but installation depends on contractor availability. Waiting until late fall often means the work isn't completed until after winter. Many people assume they won't qualify because they own their home or because their income is slightly above the federal poverty level. But eligibility varies by state. Even renters may qualify. If you believe your household might qualify, contact your state weatherization office. If approved, certified contractors inspect the property and complete the work at no cost. Change 5. Federal appraisal changes could affect future home sales and refinancing. The Federal Housing Finance Agency has been reviewing appraisal practices and fair lending standards to determine whether current methods produce accurate and fair property valuations. Updated guidance is expected as that review continues. For homeowners, this means future appraisals may be influenced by changes in federal guidance or industry practices. If you've previously received an appraisal that seems significantly lower than comparable homes in your neighborhood, it may be worthwhile to review those records. Keep copies of comparable sales and appraisal reports. Having organized documentation makes it easier to discuss concerns with your lender if questions arise later. Looking at these 5 changes together, a clear pattern emerges. None of them are secret. None of them happen overnight, and none arrive with someone explaining what they mean. The information is available. The challenge is that many people don't learn about it until after the deadline is approaching. Taking a few minutes today can save a great deal of stress. If you own a home, review your tax assessment. Check your flood zone. If you rent, learn your local rules. If you qualify for assistance, apply now. And watch for appraisal changes. The people who avoid expensive surprises usually aren't luckier than everyone else. They simply knew what was coming before everyone else did. A little preparation today creates options tomorrow. Notice that none of these changes require you to be an expert. What matters is knowing where to look and checking in before a deadline arrives. You're back in control of your financial decisions. If even one of these applies to you, look into it this week. And if you found this information useful, consider sharing it with a family member, friend, or neighbor. Staying informed is the smartest financial habit you can develop.